Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. As we record this roundtable on February the 26th, the market has a lot of news to focus on this week, and we're going to try and get a read on some of what it has to focus on from our strategists here at the roundtable, Research Director Shiraz Mian and stock strategists Todd Bunton and Brian Boland. Shiraz, market focuses, not the least of which this week, on retail sector earnings.
That's right.
Now, so far they've been mixed to fair, and as far as the guidance is concerned, you've got everything from Home Depot's guidance below expectations to Macy's full-year guidance above expectations.
That's right.
The question is, are low expectations built in for this group?
Yes, they are. And I must add that the earnings reports that we have seen thus far, by and large, are better than what these same companies have done over the last few quarters.
Okay.
So the tone of earnings is not bad, but the tone of guidance is not that exciting. It started off with the Walmart story, the leaked emails, and then their guidance for the home market. And how the delayed IRS refunds and the higher gas prices, and let's not forget the higher payroll taxes,
Right.
have been weighing particularly at the lower end of the consumer. So yes, expectations are baked in for what these companies will do. Like, look back to the Walmart report that I mentioned.
Right.
It was an underwhelming report, but the street was so ready for an even worse reading that the stock was up on that day.
Okay, so Todd, a couple of things bother you about retail earnings this week. What are they?
Yeah, and Shiraz just mentioned them briefly, but it was higher payroll taxes this year in 2013. 77% of households are paying higher payroll taxes because of the expiration of the payroll tax holiday. And then, of course, higher gas prices. They've just marched higher week after week in the U.S., and that really does crimp, especially the middle class, the lower middle class.
That's right.
Where's that money going to come from to go out and buy goods at a Macy's or even Walmart seeing the pinch? So that does have me cautious. But like Shiraz said, expectations have come down a little bit. But I think the big thing to look for is management guidance.
That's right.
For the rest of the year.
Right.
And I think managers could be pretty tepid here, and that could bring earnings estimates down for the group. Could impact the overall market. So.
Okay, Brian, you say that the retail sector is still feeling the effects of Sandy and weak holiday sales.
Right. I think you're going to see that overhang in the numbers. I think that's mostly, as you would say, the expectation. It is kind of baked into the numbers that are out there right now. But going forward, it's obviously guidance. It's what Todd said. And I've looked at a few retailers. I think the interesting thing to look for is the dollar store trade down customer. Who may have been shopping at a Walmart or something like that, who is now going to look down the ladder to the dollar store thinking that there is an implied value when something just says it's going to be $1 or maybe less.
Yeah.
Okay,
I don't shop at those stores, so I don't know.
Market also focused this week on the Friday deadline for the whole sequester issue. But if the spending cuts do kick in, let's just paint the worst case scenario. If they do kick in on Friday, deadline is not met, what does it mean for the stock market? Todd, you don't think too much?
I don't think it's going to be that big of a deal. And the reason is because the overall impact on the economy isn't going to be that big. That's not to say we're not going to see increased volatility this week with some irrational traders, so look out for that. But I think long term, it's not that big of an issue. Despite what the politicians might be saying, don't buy into the hype, don't buy into the fear. Only $44 billion in cuts are being made this year. The rest is coming in latter years. That's 1.2% of the federal government's $3.6 trillion budget. It's a drop in the bucket. Like I said, it's a rounding error. I don't see it being that big of an impact, despite what people might be shouting out there.
Okay, Shiraz, Bernanke comments to Congress this week. More important than the sequester issue?
Absolutely. The Fed is more important to the market than anything else that's going on, sequester or anything else. So yes, when we saw last week with the release of the January minutes of how it shook up everything in the market.
Just because some Fed officials said, well, maybe
That's
maybe
right.
we'll rein the QE in a little
Exactly.
bit this year. Just
so
talking
yes,
about it.
the Bernanke's comments, everybody will be looking for reassurance that yes, the QE program, 85 billion a month in bond purchases, it's on track, and yes, the economy is steadily improving, but there are plenty of downside risks against which we are buying insurance through these bond purchases. So yes, Bernanke and the Fed are the critical drivers for this market.
Okay, Brian, you say that they're just going to kick the can down the road on this sequester issue. Anyway, markets come to expect that, so no biggie there.
Right. Congress can't get its act together on a debt ceiling, on a fiscal cliff. I don't know why you would expect them to be able to figure this out in time, or at least not say, let's kick it down the road a little bit,
Yeah.
and deal with this in 6 months. I mean, we've got all the time in the world, right?
All right, Shiraz, you say that beyond anything else, all eyes are going to be on the Fed this week. But yesterday, Monday, the 25th, market got a little shook up over the Italian elections. I mean, I don't understand it. So a comedian wins the election. What's the big deal, right?
We are trying to figure out whether the Italians are trying to be funny or whether the joke is on them.
They're inherently funny, but that's a whole different issue.
We all have been quite calm about the European situation, that they have it figured out, that everything is on a healing path, Italy and Spain, and then we get the surprise. So I don't think we are going back to the 2011-2012 turmoil, but it provides another reminder that Europe is not fixed yet. And we will be seeing these headlines about the Italian bond yields going up, and there'll probably be another election in the summer.
Well, look, the comedian wants to cut the work week to 20 hours. He wants to give everybody a stipend of 900 euros, especially if you're unemployed, and he wants to renegotiate all debt. Todd, I think I'm liking this guy pretty much, but is it just the uncertainty of it all?
Yeah, and Italians like him, the voters like him, but the bond market doesn't, right? Because why did bond yields come down over the last several months in Europe? It was because of the OMT program, the bailout, right? But there are conditions to that bailout, and it's that Italy has to follow austerity. It has to follow these strict fiscal rules.
Right.
And this guy's saying, no, we're not going to do that. So, of course, people will vote for him, right? Of course people are going to vote for that. But the bond market's saying, no more, and that's raising yields, and it's causing turmoil again.
So far, populism trumping austerity,
Exactly.
at least
Right.
in Italy. But, Brian, you agree it's just the whole uncertainty of that situation? The market doesn't like uncertainty?
Yeah, the market doesn't like uncertainty, and who ever heard of a politician lying?
Yeah, I mean,
Not me.
what can I tell you there? GDP numbers come out later on this week. Anything surprising expected there? Could be a market-moving number.
It was a negative, which was a surprise the first time around. It's going to be revised upwards. The expectation is that it's going to get revised upward to about 0.5% gain. The market saw through even the negative surprise, and what it will get now, the positive 0.6% gain for Q4. Is basically what everybody is looking forward to. This is ancient news, just basically for the record books. Everybody is looking ahead as to how Q1 is going to shape up.
Okay, that's just some of what the market has to focus on this week. Hopefully their reads have shed some light on some of this stuff for you, and I'm sure that before the week is over, there will be other things that will come into play as well. One thing coming into play with your next click of your mouse is their top stock picks for the week. You don't want to miss that.